bertemu kembali. Saham pilihan Bisnes Awani Plus minggu ini memberi fokus kepada saham media. Ini memandangkan kabar angin yang bertiup kencang di kalangan pelabur mengenai kemungkinan pilihan raya umum bakal diadakan dan sekaligus merangsang keuntungan saham-saham berkaitan syarikat media. Menurut Ketua Penyidik Runcit Afi Investment Bank Dr. Nazri, sektor ini menyaksikan faktor luaran akan memainkan peranan penting dalam memacu keuntungan saham media. Sementara itu, penekanan turut diberikan terhadap harga cetakan berikutan kenaikan harga minyak. Analisis selanjut bersama Dr. Nazri.
As for next week, Affin Investment Bank would like to recommend media sectors as our favourite going forward. This is because we believe media sectors has very good defensive qualities, a relatively good yield, stable cash flow and very predictable business model. We would like to recommend two stocks. The first one is Media Chinese International Limited, and the second one is The Star as our top picks in the near terms. Right, there are four factors why we are bullish on this sector. The first one, as we all understand, media has a very good correlation with GDP growth, and the government has already announced very high, in fact one of the best GDP growth that we see in 10 years. The GDP growth has been about 7.2%. If we look at media sector in Malaysia, there is roughly about 1.7 multiplier effects based on the GDP growth. In other words, we are expecting the ADEX advertisement revenue for the local media sector to grow roughly about 12% for this year, given the GDP growth about 7.2%. Apart from that, we also believe there are signs to suggest that the ADEX or the advertisement revenue has grown significantly higher than what we expect. This could be due to the several by-election that we see. The general election hype that has been talking also is likely to push more advertisement in the newspaper. We see stronger ringgit, and this will enable a lot of media sectors to contain the price of their newsprint. And given that, we think these are among important factors that is likely to support our local media sectors. And don't forget, there's also a growing consumer confidence, which is likely to add more to the retail advertisement in the newspaper. Already we see there's a slightly higher proportion of colour advertisement compared to black and white last year. We see strong growth, especially in the broadcast segment. The broadcast segment as a whole for advertisement revenue has grown by 40%. That is amazing to us. We also see the print segment has grown by about 20%. That is also robust in our eyes. So given that, we believe media sector has a very good risk to reward trade going forward. There's a wild card here after all. We all understand that the oil price has already grown faster than we see, probably because of the things that happen in Libya and Egypt. However, this price of oil is yet to affect the transportation costs of media sectors. We believe the media stocks has done very well in content cost management. Media Chinese, for example, has slashed their budget across the board. They have talented management to contain these costs going forward. The print segment for last year, if you look at print segment, has grown about 20%. Most of these are attributed due to the Chinese language newspaper. The Chinese language newspaper has taken about 50% of the advertising revenue in Malaysia, and we all understand that Media Chinese International Limited is the leader. They have the monopoly in Chinese print newspaper. We understand that they have control about 5 major newspapers, including 2 in Malaysia, 2 in Hong Kong, and 1 in North America. It has been stated in some research company here, 60% of Malaysian Chinese actually read the Malaysia Chinese International Limited newspaper. Sinchu Daily is one of it, and we all understand that Sinchu Daily has been publishing about 80 years, since 1929. This definitely gives a good experience on the part of Media Chinese International Limited to manage going forward. Media Chinese has also penetrated China mainland market. They are going big in China, especially on the digital products, the e-book product. There's also a strong travel business segments. We see already that a lot of people are impressed by their superior contents and the high quality journalism that we see in Media Chinese. As for Star, we also believe that Star has a lot of potential. We are targeting a price target of RM4 for a Star. This is because of their leadership position, especially in the English segment. The margin has grown from 21% to 25%. Revenue and definitely net profit has jumped by about 10%. So going forward, we believe the Star also has good potential apart from Media Chinese. Our target for Media Chinese is RM1.50, whereas our target for the Star is roughly about RM4.